Let's talk markets. We're chatting right now with Chip Flory, host of AgriTalk. Hey, Chip, how are you?
I'm doing real fine, buddy. How are you doing?
I'm doing good. So, Chip, let's get a bit of a read on the markets here right now. I'll be honest with you. We've had a number of analysts on here over the past month and a half, and I have had a hard time finding people to not be a rainy gray cloud here in terms of the direction and what the outlook here is. You talk to analysts every day on the afternoon version of AgriTalk. How do you break this market down here right now? Is that bearishness warranted?
The way the markets are trading, I would say no. You take a look at the sideways pattern that we've got going in corn. That market has obviously found its downside limit. You can say that it's found its upside limit as well. We did get one close last week above $5. I wouldn't be a bit surprised if we don't see some kind of a retest of that high up around 509. But the ability of the market to say, listen, trading below 480, 475 just doesn't make a whole lot of sense, is a sign to me that the market is finding what it needs to put a floor in at that price level. Now, could we spike down to 460, even 450? Yeah, but if we do, I don't think it's going to be for very long, and we're going to be right back into this sideways trading range. Wheat has just been a bleed to the downside, but it is showing some signs that it wants to put a low in. And then when you look at the soy complex, the soybean oil market is making new lows right now, but soybean meal is making new highs. We've got demand for soybean meal coming to the market. China bought some more soybeans this morning from the U.S. Argentina is basically out of soybeans. They're not going to be providing any product to the market. And by the way, Haney, this is the second time soybean meal is trading the Argentine drought. How often does that happen?
Right.
I mean, the meal market traded the Argentine drought while the drought was happening, and they were losing bushels day after day after day after day to the crop. And now we're realizing that they're going to be out of beans and not offering much product to the market, and meal gets to rally again.
Shocker.
Yeah, it's surprising as heck to me that the meal market is able to do that. So when you find that kind of variation that's happening in the market right now, I think it's showing us that it wants to put a low in.
Well, and a lot of the analysts we've been chatting with have brought up demand as the big issue, the global economic slowdown. What is the buying going to be like? USDA predictions on exports are relatively high in context of, like, say, 5-year averages. What about demand?
Okay,
we're talk about that.
Yeah, China's failure to relaunch coming out of COVID is a big part of it, and the fact that the economic issues in China are slow to develop, to say the least. But we're going to get GDP for the U.S. tomorrow, and it's expected to be like 4.2, 4.3%. So we've got economic activity here in the U.S. Typically, that is enough to generate some economic activity in other spots of the world, including Asia.
Yep.
So I would expect that the resiliency of the U.S. economy, we can say what you want about Fed Chairman Powell and the Federal Reserve, but somehow, some way, even after they were as wrong in their outlook as they were a year ago, but somehow, some way, this economy does look like it's going to manage somewhat of a soft landing and start to turn back stronger. Now, is there still the risk of recession? Absolutely. I think when you look at the credit card spending and you look at how consumers are reacting to what's going on in the markets right now, I think that there is obviously still the risk of a recession. And the amount of money that consumers are spending on fuel, the amount of money that consumers are spending on housing right now, good grief. We just haven't had to do anything like this for the last 30 years. So how that's going to have an impact on their regular spending is still left to be determined. And that's really what's going to determine if we're going to be in a recession or not, and if that's going to impact the grains. So you've got the concern about the economies is contributing to the negative attitude in commodities. You've got this lack of demand that has gone on, I think, long enough in corn. We've got Mexico's been building the book for U.S. corn. I got to believe that Colombia is going to be in next. I got to believe that South Korea is going to be building its book, that we're going to see Vietnam, Indonesia, Bangladesh. They're all going to start to fill their corn needs here fairly soon. And the U.S. has its shipping problems. I get it. But so does Brazil. And the U.S. is getting more competitive. The doggone dollar rallied hard again yesterday. And if that thing continues to show strength, it might be hard to get a lot of momentum going in export sales. But eventually the countries that buy corn are going to have to buy corn. They don't have their book filled with Brazilian corn. They got to buy corn someplace, and the U.S. is going to be the source. And then China's coming in and buying beans again.
Yeah. You mentioned the shipping issues. We've got a strike going on the St. Lawrence Seaway. That's taking up a lot of the oxygen in Canada this week from a transport perspective. But in the U.S., a lot of talk about how low that Mississippi River is. What kind of impact is that having, Chip?
Well, it's 20 to 30% lighter tows. When you're talking about having to take 20 to 30% of the product out of those barges, it just increases the cost of every bushel that you do move. And you would think that it would be reflected in some crappy basis along the river, but it's not really happening. There's still enough demand to fill those barges that basis is holding up. There's still enough demand, even though everybody says ethanol is struggling. There's still enough demand at the ethanol plants that the ethanol guys are competing against the river terminals for corn. The demand conversation is always so negative, but when you look at the realities of the market, with corn basis firming up during harvest and soybean basis firming up during harvest, it can't be that bad. It just can't be that bad.
So are we just, if the institutional trade, like, people that are on both sides of the inventory here, the normal stakeholders, I guess I don't know how we should refer to them. If they're comfortable with where the prices are today or where things are trading, are we basically essentially, if we're on the long side or long hopeful, are we waiting for those funds to sort of get a little bit of a wait a minute here? This isn't as negative as maybe we thought. Let's go from short to long and, of course, try to make money on both sides of the trade. Is that kind of what we're waiting for at this point?
Yes, I think that's exactly what we're waiting for. And I think that's what some of the importers are waiting for, to see that sign that it's starting to happen before they go ahead and cover their book. Look at how vulnerable cattle were to one negative cattle on feed report. The funds and the institutional money had been on the long side of the cattle market for so long. I mean, some of those long positions had to celebrate an anniversary, maybe even two. And when you look at how long that money had been long in cattle, when it came time to get out, everybody wanted out at the same time. Just the simple fact that every contract didn't lock limit down and just stay there. And the fact that it could continue to trade through the end of the day on Monday, I thought was really impressive. I don't like the way that the cattle market tried to recover yesterday and then gave it all back by the time we got to the close. But again, that market is showing the ability to continue to trade, even though everybody wanted out of those long positions. Who was left to buy it? And that's the fact that somebody was in there on the buy side of that market, I think speaks volume of how much flexibility there is. But yeah, Haney, I think once the funds decide that it's time to get out of short positions in corn and in wheat, because doggone it, the markets just aren't going down like we thought they would.
Yeah.
I think that triggers a lot of the activity in the cash market that we're looking for too.
I love a good candlestick chart and looking at some of the flow of the market. You just mentioned something I think worth explaining to the audience here before we close. In any commodity, how we close compared to the range is important, right? And you referred to cattle there. When we close well below the highs of the trade of the day, it shows lack of commitment. People have exited before the day. They don't want to be holding that. They're not as committed to that position. They don't want to risk the overnight trade. Is that the way to explain it?
Yeah, it is. 1988, 1989, I met a guy by the name of Roy Postel, Kickapoo Analytics. He was there on the floor of the Board of Trade. And the question he asked every day was, where did it open, where did it close? Where did it open, where did it close? And you can take so much from that. And, when you get those days where you do spike to the upside, you fall all the way back and you close below the opening range, that's a momentum killer. Or if the trend is down and the momentum is to the downside, and the market trades higher, it early in the day comes back down and closes below the opening range, that adds to the downside momentum that's in that market. So we talk about it every afternoon on AgriTalk, where the market closed compared to where it opened for wheat, corn, and soybeans, probably even cattle and hogs. We're going to talk about that because where did it open, where did it close, where did it open, where did it close?
Yeah, and just like, hey, if when you'll hear a lot of people like yourself will say, and we close at the top of the market, right? That's that's a good sign, right? So, hey, Chip, really appreciate it. Everybody, if you don't tune into AgriTalk, please do so. AM and PM show. Check it out at agritalk.com. Chip, thanks a lot for joining us.
You bet, Sean. Thanks, buddy. We'll see you on Friday.